What's going on, guys? Today I wanted to talk about Robinhood stock, and we're going to talk about three key things. So, why is the stock dropping? Where do we think the stock is going to be headed in terms of price targets? And then the potential of an acquisition by a much larger company. So, if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So, first thing up here, we're going to take a look at Robinhood's chart. So, over the last day, they actually spiked up almost 10% after hours. They're down just a little bit, 1.4%. But overall on the week, they had a huge drop here on the announcement of earnings. So as earnings came in, and we'll take a look at them here in a second, but basically they had a lot of negative results. The market overall just didn't like it, and basically they dropped down below $10 here. But more importantly, we want to look at the long term. So long term, they had some stability here around the $15 mark. And then if you go back even further, they really started dropping kind of a $40 level. So they sat here at this $40 level, and then you can kind of see back in November when a lot of the market, October, November, when a lot of the market was starting to tank and starting to realize a lot of these fears that we're seeing now in the market, the stock just basically fell and fell and fell and fell. So it didn't have a whole lot of stability between $30 and that $15 mark that we're kind of seeing in here, $15 to $20. And then, right, it's kind of dropped off, and it just keeps dropping. So let's take a look at basically why the stock has dropped more recently, and we had that huge dip. So here we have an article by CNBC, and this was posted Friday, January 28th, so just yesterday. And Robinhood shares rallied more than 9% Friday after falling 14% in earlier trading. So that 14% was on the back of basically their earnings call, which we're going to get into kind of here in the article. And basically what they talk about is Robinhood's guidance for the first quarter came in really low. So right here they say Robinhood's first quarter guidance and its data on monthly active users were the weak spots in the earnings report released Thursday after the bell. So right, that's that dip that we're seeing Thursday into Friday. First quarter revenue of less than, basically they anticipated first quarter revenue of less than 340 million, off 35% from the year earlier period. So basically what they're saying there is last quarter they have dropped their guidance 35% compared to basically their first quarter of 2021, which, as we all know, first quarter 2021 was a huge trading year as kind of cryptocurrency and everything started taking off. Meme stocks, GameStop, AMC, all that stuff was kind of going on. So there was basically a large downtrend. 35% year over year is really not crazy compared to when you think about how much trading was actually going on during those times. So then they get into, say, Wall Street's consensus estimate for revenue was actually 448.2 million in revenue. So significantly higher, $100 million higher was Wall Street's basically prediction for revenue for the first quarter for Robinhood. And again, a lot of that, right, they're baking in a lot of trading that had to do with a lot of meme stocks and other things going on. So I think that was kind of an initial spike, and I think seeing this pullback, it really shouldn't be much of a surprise. And then the next thing up here is monthly active users. So that's huge, right? How many people are actually using the app on a monthly basis? Because obviously the more active their users are, the more money that Robinhood is able to make. So the monthly active users fell to 17.3 million in the fourth quarter from 18.9 million in the previous period. That fact was below Wall Street's estimate of 19.8 million. So basically they had an estimate of 19.8, and Robinhood came in again almost 2 million, over 2 million below Wall Street's estimate. So that is a huge down move. And again, I would get into the fact that, right, the fourth quarter of last year was a rough quarter. So we saw the market started experiencing a lot of volatility back in September, and a lot of people, right, basically get freaked out by volatility. If you see your stock account drop 5%, 10%, whatever it may be, because a lot of these users are purchasing a little more speculative stocks, right? They might have even purchased Robinhood stock. And if we even go back and look at Robinhood, kind of in the last quarter, you've seen a huge drop off. And right, as you see things like that, a lot of these users are going to be a little bit more fearful and get out of the market. So not really surprised there. The biggest thing that I take away from all these earnings is, right, the first quarter guidance is really low. And for me, that is a positive thing because, right, you're buying a stock where they're already baking in bad news. So now, if Robinhood coming up on basically their next quarter, if anything happens, let's say crypto takes off again, or anything very just interesting in the stock market happens, they'll get a lot more monthly users, they'll get people spending more money, and overall those metrics could go up. And basically, right, they're already baking in bad news, so there's not a whole lot of more downside, in my opinion, in the stock. So these are all kind of positive things. The only down kind of side here that I don't like is a lot of firms, so several firms including Goldman Sachs, JP Morgan, Piper Sandler, never heard of them, but they've all lowered their price targets. And then you have Barclays and Deutsche Bank as well. So they're all lowering their price targets on the stock, which isn't really a surprise. Whenever you see a stock tank, a lot of these analysts, they just look at it and they say, well, the stock is down, so I better lower my guidance just so I can look like I'm right, you know. So it's not overly concerning, but it is something you kind of want to see, and it does provide the opportunity for, right, if as analysts turn around and start increasing their price targets, then the stock starts seeing a lot of opportunity for popping up even more. So overall, I like looking at things from the positive side, and I see overall a lot of negativity, which for me, being more of a contrarian investor, I see a lot of positive in that for basically the future. All right, so as I mentioned in the intro, I like looking at where analysts have their price targets at. And basically what this comes down to, even though I said I don't necessarily trust analysts, what this comes down to is the law of large numbers. So if you've ever had one of those basically jars that's filled with, let's say, gummy bears or Skittles or whatever it may be, and basically you have a bunch of people trying to predict how many Skittles are in that jar, there's a theory that states that as people, as the number of people who are guessing on that number of Skittles, as the number of people gets larger, basically you're going to get a more and more accurate number if you take the average of all those guesses. So that you can kind of apply the same thing, and it makes sense if you do it at very, very large numbers for stock prices. Because if you had everyone in the world basically predict where Robinhood stock would go on a daily basis, then in reality, right, you're going to get what the price is basically at right now, right? Because the consensus right now is people believe the stock is worth $12.73. But if you could have people guess where they thought it was going in the future, then again, you could get somewhat of a reasonable expectation for where the stock is going in the future. So here, anyways, again, I could make a whole video on that topic, but basically we have 5 analysts saying that the stock is a buy. We have 8 analysts saying that the stock is a hold, 1 saying underweight, and then 1 saying sell. So really only two with negative outlooks, 8 that are kind of neutral, and then 5 that are positive. Overall, here's where things kind of get interesting. So there's a high price target of actually $51 on the stock. The median is $15, and the low is $11 with an average of $21.31. So if we take that $21.31 and we actually basically try and determine if the stock were to move up from its current levels of $12.73 to that $21.31, we would actually have almost a 70% return, which is very, very obviously good for the stock market. The other math that I kind of want to look at here is this median. So this median number is kind of right where the middle of the expectations is, because right now clearly there are a few people that are weighted very on the high side with that $51 price target. So that is basically very, very aggressive. So what I'd like to look at is that median. So if we take $15 and we subtract the 12.73, we'd have a $2.27, and then we divide that by 12.73, then we have a almost 20% return. So even with the median price target of $15, which I believe is where JP Morgan may be at, you're still looking at a 20% return. And a lot of these are right stock price targets for over the next year period. So a 20% return on the market is still a great return. So one of the largest banks in the world, if not the largest bank in the world, is JP Morgan Chase. And they are ran by a guy by the name of, or the CEO of JP Morgan Chase is Jamie Dimon. So here's an article and it says, Robinhood is bleeding, Jamie Dimon is spending. So this is what we're talking about when we're talking about a potential for an acquisition. So basically this article goes into why Robinhood could potentially be acquired by JP Morgan. And in all honesty, I don't think it would be a terrible move by JP Morgan. I think it would be very interesting and there would have to be some shifts within the company, but I think overall it could be a very positive for JP Morgan. The real question is, would Robinhood want to pursue something like that? So basically here I highlighted in green some of the very interesting things that I thought were stated in this article, and then yellow some things that are kind of middle of the ground. But the CEO, Jamie Dimon, basically stated that banks should be scared. I won't cuss here, but basically that they should be scared that that they're becoming more players, more fintech players, basically in the market, and that could basically affect their overall hold on the banking industry and financial industry overall. So he's vowed to basically spend $12 billion on tech to make sure that they kind of stay competitive with these new up and coming players. So Robinhood would obviously present a very good potential for them to acquire them and basically get that exposure to fintech that they're kind of looking to have. Robinhood has lost basically much of its value, so it could easily be a acquisition target for a lot of larger banks. I wouldn't be surprised, right? JP Morgan, Wells Fargo could be potentially looking into something like that. Wells Fargo would actually kind of suit Robinhood, I would think, very well, because you've actually had a lot of issues with Robinhood, and then also had a lot of issues with Wells Fargo. So I wouldn't be surprised if there was an acquisition there. I don't think it would be a very great combination, but that wouldn't surprise me at all. JP Morgan retreated from actually online brokerages in the past, so they divested their Brown Co division, which was in e-trading, so that was in 2005, and then they kind of actually returned to the business here in 2018. So they actually have exposure to this before, so it's not really, what I was pointing out here is it's not really out of the realm of possibility. You know, they've been interested in it. They kind of got rid of that division in 2005, and then they've kind of been dabbling back in it in starting in 2018. So this would be kind of a full dive into that sector and get them a lot of exposure. Here's a huge point that I highlighted green here. So a lot of young investors, right, are on Robinhood. It's more kind of catered to young investing, and this would be an instant, basically the acquisition of Robinhood by JP Morgan would instantly gain them a lot of customers that are of younger ages. So this would be massive, right? Getting them into their ecosystem, into the JP Morgan kind of space, and as they kind of grow up, they might use JP Morgan Chase bank accounts, basically use a lot of things that JP Morgan already has on their books, you know, that they're already doing, get them interested in those things as well. And then, right, Robinhood having it kind of more as instead of purchasing it as thinking Robinhood is going to make them a ton of money through Robinhood and through the trading that they provide, instead purchasing it as hey, we want to basically use this as advertising for JP Morgan Chase. I think that would be a very interesting kind of move in there. The bigger question in here is kind of, would Robinhood be willing to sell? So you have Vlad and Baju, I'm not sure if I'm pronouncing that correctly, but basically divesting or selling off Robinhood to a large bank would kind of be inconsistent with what they've said their values are, which you could argue, right, in the past, over the past year, they've had a lot of trading issues where, right, traders are kind of left out to dry, and you could argue that that's even against their value. So I don't think this comment is necessarily true when it comes to Robinhood, right? At the end of the day, if they're bleeding money and they don't see really a huge path forward, and JP Morgan sees a lot of potential in purchasing Robinhood, then I think they could be interested, basically, they being Vlad and Baju, they could be interested in selling Robinhood. Here was something I didn't highlight, but they have a large voting ownership, 65% voting power for the company. So it ultimately is going to come down to if they're interested in selling. If the two of them are interested in selling, then they're probably selling. If not, then nothing's probably happening there. JP Morgan would probably look at lower pricing for Robinhood, so they are obviously going to want a deal on Robinhood. They might be interested. I mean, if they have a price target of $15 and they think that's reasonable, then basically I would say that would be likely of where they would purchase the shares, which would present a 20% upside, so that would still be positive there. JP Morgan can clearly afford it, so they're worth more than $400 billion. So there's no real question of whether JP Morgan would be able to purchase them. It's pretty clear that they would. And then basically, again, this gets into the point that I think is massive here. That is, JP Morgan would be purchasing basically 19 to 22 million or 19 million users with 22 million funded accounts. So that would be huge, again, in getting those people into their ecosystem and basically using more JP Morgan type of services. So overall, I think it's a possibility. I don't think it's out of the realm of possibility. Again, it might be JP Morgan, it could be Wells Fargo, you could see Bank of America, but I think JP Morgan has kind of shown and wanted to demonstrate that they are more progressive than those other two banks. So I wouldn't be surprised if this kind of went through. But overall, I hope you enjoyed the video. Let me know what you guys think of these kind of couple things, because I think this is very interesting. I think the price targets are also very interesting on the stock, the fact that there's such a wide range. So I'd love to see your comments down below. I'll try and reply to anyone any comment that's left down there. But otherwise, I appreciate you watching. If you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure to hit that sub button. Otherwise, have a wonderful rest of your day.